Ethiopia is preparing to open its first stock market in decades this month, marking a major shift in its economic policies. The Ethiopian Securities Exchange will soon begin trading in Addis Ababa, a move officials say signals the start of a new era for the country. Tilahun Kasahun, the chief executive of the Ethiopian Securities Exchange, described the launch as more than a milestone. He emphasized that it represents a transformation for Ethiopia's economic future. The stock market opens against the backdrop of Ethiopia's efforts to move away from state-led economic policies imposed during the Marxist Derg regime, which took power after overthrowing Emperor Haile Selassie in 1974. Outside the stock exchange building, a 50-meter pillar with a red star still stands as a reminder of that era. Prime Minister Abiy Ahmed has spearheaded economic reforms since taking office in 2018. These efforts were briefly derailed by a devastating two-year civil war, which ended in late 2022 and resulted in at least 600,000 deaths. Now the government is pushing forward with reforms aimed at liberalizing the economy. One of the most significant changes has been the liberalization of Ethiopia's foreign exchange system. This reform was a requirement for securing a $3.4 billion bailout from the International Monetary Fund in July 2024, the largest concessional program ever approved by the IMF. Eyob Tolina, Ethiopia's state minister for finance, noted that the government has stayed committed to reforms despite various challenges. Officials now aim to secure up to $27 billion in financing and investments over the next 4 years, equivalent to 16% of Ethiopia's GDP, from sources including the IMF, World Bank, China, and the UAE. These funds will help ease Ethiopia's foreign exchange shortages, rebuild infrastructure, and restructure debt after the country defaulted in December 2023. As part of its strategy to develop a domestic equity market, Ethiopia will start by selling 10% of Ethio Telecom, one of Africa's largest mobile operators. In addition to launching a stock market, the government has implemented conventional monetary policies, increased tax revenues, and floated the national currency. In December 2024, Ethiopia also opened its banking sector to foreign investors, a move previously prohibited under the state-controlled economy. An Addis Ababa-based economist said the government has no choice but to continue liberalizing its economy to attract foreign investment given its financial struggles. However, challenges remain. While Ethiopia's reforms aim to tackle economic issues, problems such as bureaucracy, corruption, weak property rights, and ongoing insecurity persist. Ethiopia's economy had been growing at an impressive rate of 10% annually for 15 years before the civil war. But the conflict, which caused an estimated $28 billion in damages and lost output, slowed progress. Even during the war, Ethiopia's economy grew at 6%. Finance Minister Ahmed Shide now projects growth to accelerate to 8.4% in the fiscal year ending in July 2025, more than double the sub-Saharan African average. The IMF's bailout came shortly after Prime Minister Abiy allowed the Ethiopian birr to float against the dollar. Mamo Miretu, the central bank governor, called the decision to float the currency the most significant economic reform in Ethiopia's history, comparing it to reforms in China and India. Following the devaluation, Ethiopia's foreign reserves tripled to $3.6 billion, easing chronic currency shortages. Companies like Dangote Cement, Heineken, and Coca-Cola were finally able to repatriate profits that had been stuck in Ethiopia. The birr's exchange rate fell from 57 to 125 per dollar, and the IMF reported that the gap between official and black market rates has narrowed significantly. Subsidies on essential items like edible oil and fuel have helped control inflation, which the central bank predicts will drop from 30% in December 2023 to 15% by the end of 2025. Analysts, however, warn inflation may spike to 25% before stabilizing. Many Ethiopians continue to struggle with high living costs, and 5.5 million people still need humanitarian food assistance. Despite these challenges, Ethiopia's leaders see the reforms as vital for growth. Ethiopia's per capita GDP remains low at $1,020, and some experts say it still resembles a post-Soviet transition economy. Security concerns, especially in Oromia and Amhara regions, further complicate efforts to attract investment. Prime Minister Abiy's push for Red Sea access, following Eritrea's secession in 1993, has added to tensions with neighbors like Eritrea and Somalia, raising fears of regional conflict. This instability may discourage some investors from entering the Ethiopian market. Central Bank Governor Mamo Miretu acknowledged the difficulties ahead but stressed that the hardest reforms are already in place. The government believes these changes will gradually transform Ethiopia's economy and restore investor confidence. This analysis is adapted from the Financial Times.